Hey everyone, welcome back to Main Street Data. In this video, we're going to be looking at the company Alphabet, formerly known as Google, in a little bit more detail. They just released earnings the other day, so the stock has been a little bit dynamic, down a little bit, but this is still a fantastic business in a lot of ways. So yeah, let's just click into a couple of the more interesting graphs going on at Google. Now, the first chart that we can see here is how Google's capital expenditure has been looking over time. Actually, we can even extend this out a little bit. And as you can see, this company is spending more and more on capital expenditures, and really over the last 3 quarters has hit some new peaks. So this company is obviously spending a lot on things like AI, their Waymo department with self-driving cars, and other growth initiatives, which on one side is great that they're spending for growth, but on the other side, are they getting a great ROI with the spend that they're doing, or are they expecting a great ROI? So part of the reason why the stock is down a little bit is that this number is a little bit higher than what Wall Street was expecting. Google is spending a lot of money for all of their future investments. Now, if we take a look at this graph and change it up just a little bit, let's get rid of capital expenditures and add the free cash flow. We can see in the last few quarters, the free cash flow has not been growing as much as the capital expenditure has. So this does raise a question that is Google getting the ROI that they really need to be on their investments? So this is TBD, because a lot of these investments that they're making are more long-term, but this is definitely something to keep an eye on for the future. Now, the next important graph that we're going to look at in this video is the shares outstanding. As we can see, this number has been consistently declining over the last several quarters, which is actually really good to see. That means the company is most likely profitable and spending their extra cash to acquire shares because they think that they're trading at a discount right now. So hopefully this trend continues. If you're a long-term shareholder, this means that your percentage ownership increases even if you don't increase the number of shares that you hold on to. So a lot of times when looking at a long-term investment, this is a really good sign to see. Now, finally, going over to the dashboard tab, if we just look at the net income graph, we can see that this is still an extremely profitable company. They had over $23 billion of net income over the last quarter alone. That's basically a $100 billion run rate of net income for a $2.13 trillion company. So this company is still extremely profitable and is doing quite well. So there definitely are some positives and negatives with this most recent quarter. So definitely encourage everybody to do a little bit more research on this company to see and assess if it's a long-term investment for you. As always, at Main Street Data, we have a whole bunch of charts and graphs so that you can do your analysis a little bit easier. Thank you.